Hello and good evening. This is Doc's Market Minute for Wednesday, the 19th of January. Markets have been making a corrective move the last few days, with the closing prices being lower each day. Let me show you the one thing to watch for in terms of the daily price action. Here's a chart of the S&P 500 daily chart, and you can see these movements that we've had over the past several months where we've had these corrective patterns come across into some pretty strong pullbacks along the way, and we're seeing that right now. So most people want the price to go higher. I would say the majority of people are out there positioned long still and looking for higher prices to maximize the value in their portfolio. So how do we know when a reversal is going to come along? Well, let me tell you what you don't want to see. What you don't want to see is an early rally in the day. Let me show you the candlesticks that actually do start the reversal process. Each one of these is known as, or is very close to, a hammer candlestick formation. Now, what a hammer candlestick does is it starts its day at some point, whatever the opening price is. And it ends up going much lower during the course of the day, and then it reverses that price movement back to the upside, and in many cases will actually have a higher closing price, like this one right here. So what does that look like intraday? Here is today's intraday price chart, and we had a nice gap up this morning, so everything was real strong this morning. And the European session was relatively strong. So we ended up gapping up about as much as 20 handles today. And then this is our opening range where the price didn't really go anywhere at all. And right after that, things started to fall apart. This is what I'm saying is the don't want early rallies. Now, sometimes, occasionally, an early rally will stick, but it leaves behind a big gap that has to be cleaned up later on. Doesn't always have to be cleaned up, but many times the market feels a need to do so. So don't watch for the early price action. What you should watch for is the closing price action. Here we are today with about 30 minutes left to go in the day, and the price is relatively weak. Normally, if we're going to have a reversal day with one of those hammer candlesticks, the price would have started this reversal process maybe as early as 2:30 or 3 o'clock Eastern time. Now, there's nothing that says the price can't rocket up here in the last 30 minutes, but it doesn't look like it. So what to watch for is early weakness and late strength in the day. That usually starts the reversal process back to the upside. Thanks for listening, guys. We'll see you tomorrow.